as a homeowner, pay attention. Make sure that you're looking at your house as an asset, as something that's giving you money back, not something that you're just using. Don't just use your house, take care of it.
No pressure.
Hi, it's B.
And I'm Mark, and we're the Real Estate Dream Team.
Oh my gosh, Mark, why the heck should they listen to yet another real estate podcast? Well, I will share my why, and that is we'd love to tell you how to get those keys the smart way.
And help you crank those gears that turn your dreams into homes.
There you go. Let's roll,
Let's
baby.
roll, baby.
Welcome back, everybody. Today, we're going to talk about you've bought a house, now what? We're going to talk about you bought a house, what other expenses are you going to have to think about? Or you're thinking about buying a house and you're wondering, beyond my mortgage payment, what do I need to budget for?
So are you saying, Mark, that we're going to talk about how to avoid pocketbook panic?
That's right. Well,
Had to say that.
or just being informed about the fact that it's not just you bought a house and now that's it, right? Because I have this conversation with first-time home buyers mainly is, preparing them for what comes after. The home buying process itself has costs attached to it, and we've done podcasts on those. But what happens? What is your mortgage payment going to pay for? What are you expected to pay beyond that and other things? And so I wanted to go through some of those things. First,
Greatness.
I'll start with the mortgage payment because that's kind of my wheelhouse, and then we'll move into some of the other things that are both, real estate and finance. But
Yeah.
So the mortgage payment consists usually of three things, 3 or 4. So the first one is your principal and interest payment. So that is actually the loan. So when people say a mortgage payment, in my opinion, it's a misnomer because they're lumping in all the other things together with the principal and interest payment. The principal and interest payment is the payment that pays your mortgage. But then on top of that, your mortgage payment typically has your monthly homeowner's insurance included in it and your property taxes monthly. Those are included in your mortgage payment. But to me, the only mortgage payment is really the first part, principal and interest.
So the umbrella of the mortgage payment is 4 things: principal, interest, taxes, and insurance.
Well,
Even though when people are saying mortgage, they're not even thinking about taxes and insurance. They're thinking about loan repayment, money repayment, and the cost of repaying that loan, which is called interest.
Correct. And then the 5th thing that some people have is mortgage insurance. So if you have a FHA loan or you didn't put 20% down on a conventional loan, you'll have mortgage insurance as a 5th component of your mortgage payment that you pay to the lender every month. And so once a year, that lender then turns around and pays your homeowner's insurance on your behalf and pays your property taxes out of what's called an escrow account.
So time out for a second. Yeah. So did everybody catch that? So pushback we've all heard. Even though property taxes are paid in Texas, they're due January 1st of the following year. So even though they're only due once a year, you pay on them 12 months of the year.
To make up the total payment, to make it easier, instead of you having to cough up $10,000 on January 1, you've split that over 12 months, right? So that's why lenders do it. It actually helps you budget better. But that's your mortgage payment and what's traditionally called the mortgage payment. So that is the obvious part that you're paying every month. But then there are other things that you're paying owning a house, and that's where in previous episodes I've mentioned the real estate maturity comes into effect. If you're not mature enough to own a house, you're going to be very surprised by the extra things you have to pay for in a house, such as just general upkeep. Yeah.
And that comes in the form of those systems, the guts of the house, plumbing, HVAC, electrical, roof, the trim, the edifice that is your amazing house. Those all have different costs. They all have different maintenance schedules, but they do need your eyes and ears looking out for them, and your pocketbook
especially
at times.
your air conditioning and heating needs yearly tune-ups, so that's going to cost you
and
money.
And that is a great home hack, talking about mitigating costs.
Right.
Just almost exactly like your car with regular oil changes. We're all used to that. Your home has similar annual preventative maintenance things that you can invest in up front. And one of them is an annual tune-up on the HVAC system. Runs about $250.
And if you're living in an older neighborhood in Texas or anywhere really, if you live in an older neighborhood, in an older house, I would personally recommend every couple of years having a plumber come out and do an inspection, like a video inspection of some of the main pipes coming to the house.
Camera inspection.
Yes, because you've got a lot of times you've got very old piping coming into the house from the street, and that's being infiltrated by tree roots and all kinds of other things, may even have a leak in it. And so that's kind of preventative. It's going to cost you what? How much are those
inspections? About $300.
$300, but it's worth spending the $300 instead of waking up and having just having peace of mind.
Right.
That it's all okay, or knowing the plumber's going to come back to you and say, "Hey, those pipes are not going to last very much longer."
So now you can start saving a little bit, putting it aside.
A lot of homeowners that call me in a panic are the ones that didn't plan, right? They did, and that's why I bring all this up. Is you have to maintain one of the biggest assets you'll ever own. Most of today's retirement wealth is tied up in housing. So the current generation that's retiring has most of their retirement wealth in their home. So
don't they have that generation? It's like the highest, like owned in full.
Yep, the highest percentage ever. Ever. And wouldn't it make sense that you maintain that? Wouldn't it make sense that you invest a little bit of money every year and maintain it? And that's where people get in trouble. They don't. They literally treat it as if they were renting a house, and it's just not a
magic.
wise.
And it's not
magic. Wise.
It's not magic.
It's not. And the roof is a little more difficult to me. It's like I used to climb up on my roof because I clean my roofs all the time. But so I looked at the shingles, and having been a real estate agent, I had a little bit of education in that. And so, but I don't know if you call the roofer.
Well, there's a balance on that, because every time you walk on the roof, you risk damaging it.
Right. You got to be careful.
So
not
you have to be mindful of that, right? I mean, all the things. Nowadays, I would say a good hack on that would be to have a visual on the roof would be to hire a drone operator. And that's a growing business. Is drone operators charging like $150, some or less, to come out and drone survey your roof. That is money well spent, because especially in Texas, when we have high wind storms and other things, there could be a big branch up there that you can't see from down below, but there it is right up there, like snuggled up next to your fireplace chimney.
And damaging the shingles. And
you have no idea.
The other one to do that I see in my 25 years in real estate, I've seen most often also is a maintenance issue that people aren't paying attention to, is rotting wood, peeling paint, anything of that nature on the outside of the house, not being maintained. And rotting wood can cost a lot of money. Especially on the chimney. People often, you're more likely to catch it like on the fascia, on the front trim of your house, because it's almost eye level-ish. But the chimney, holy cow, that poor chimney gets totally forgotten about. It's you really have to look at your house regularly and climb up on a ladder and look in places that you normally don't look at, right? Because again, it's your biggest asset, and it makes sense for you to protect it and protect that value, right?
It's very similar again to your car. And that is just preventative maintenance. Do that 50,000 mile checkup, the 100,000 mile checkup, the oil changes, and you get rewarded with a longer life. Like I recently found out from my vehicle, Jack the Jeep.
Yes.
He just hit over 200,000 miles, and my sweet mechanic said that he was astounded I had made it that far, because the V6, sadly on Jeeps, are renowned to take a little lifetime out. To go to Jeep heaven at around 160,000 miles. But he said, because I've been doing regular maintenance on Jack the Jeep, He's just humming along. He is starting to cough a little bit. He's developed a little bit of a hack.
Like me.
So I have been told that we have maybe another year with Jack the Jeep in his present condition. But because I've been doing the regular maintenance, I now can start that little savings plan.
You can prepare for it.
For the future of a rebuilt engine and all these things.
That's my point. All of this is
those gears
is a good, just being realistic about, because again, I get phone calls from panicked homeowners. Their choice is to refinance the house, which is very expensive to do, or literally sell the house because they haven't maintained the house. Now it's falling apart.
Well, and there's some money.
Now they need, $25,000, $30,000 just to do basic maintenance that they should have been doing all along. And it wouldn't be 25 because, as we all know, if you don't do this maintenance, the costs actually go exponential.
Yes. Foundation is a very good example of that.
People
in
stick
Texas,
their head in the sand.
North Texas, foundation. So houses are always moving because of the type of soil that we build on in North Texas. And if you pay attention to those sticky doors and things like that,
and the cracks.
A foundation can run as little as like $1,000 to fix this and this.
Or just to shim it, or just to adjust it.
It can also rapidly escalate to tens of thousands of dollars to steady it. And going back to, oh my gosh, deferred maintenance, now we have to sell. The foundation is a big driver on that, sadly.
Often. And then it's a fire sale, right? Because not only, if it costs you $10,000 to fix the foundation, if you put your house on the market because you didn't have the $10,000 to fix the foundation, the buyer is going to assume the absolute worst. So they're going to get bids that are, as we all know, some of these companies are crazy what they bid.
Oh, you're the buyer? Be like, we're going to help you out.
Yeah, we're going to make the bid for $30,000, right? Now you've given up $30,000 instead of $10,000 because you didn't pay attention to the foundation in the first place, because this is a slow-moving train wreck. Right, a foundation problem is a slow-moving issue that you could have caught years ago, and spent a little bit of money instead of $10,000. You would have spent $5,000 or $3,000 fixing it, but instead you stuck your head in the sand, didn't want to acknowledge it, and now you've got a $30,000 problem. Right, so it doesn't help you. So as a homeowner, pay attention. Make sure that you're looking at at your house as an asset, as something that's giving you money back, not something that you're just using. Don't just use your house, take care of it, right?
Just like your car, your kids, your hobbies, golf clubs, or a high-end bicycle or motorcycle or whatever. Do you just use it? No, you wipe down the clubs on the regular basis. You
maintain them. You clean.
Scrub the kids. There's maintenance for all things that we invest with.
One fee that we haven't touched on, which is a big part of a lot of people's monthly costs, is the HOA. And the HOA can cost you a lot of money too, but you're not in control of that. Unfortunately, there's nothing for you to do maintenance-wise, but it is a cost that you need to be aware of, that, like your property taxes and your property insurance, your homeowner's insurance, the HOA fees are likely going to go up over time. So HOA fee that's a certain level now is not going to be, in 2 years from now, it's probably going to be higher. So plan for that. Your property taxes are probably going to be higher in the future. So plan for that your monthly payment is going up every year, but you're going to get paid back for that, right? When you sell that house, that's money coming back to you. It's not money wasted.
And ultimately, the most expensive thing you could do is to impersonate an ostrich.
You're right.
That's a non-adulting, always expensive choice.
In every aspect of your life, yes. Take it from some old people.
That's right. Don't be an ostrich.
No.
Be an eagle, or be sharp-eyed.
And the HOA fees can go up for various reasons, but some of the reasons are maintenance issues that you have to pay for as a collective of that HOA. You pay for maintenance of the whole community, right? And again, the HOA's job is to maintain the property. just like you're maintaining yours, they have to maintain the overall
The shared
community.
property.
Yeah, the shared
Because
property.
you've got your personal property in HOA, and then you've got the shared property.
So as a homeowner in an HOA, you're not only maintaining your space, but you also have to pay to maintain the shared space. So it's an added cost that some people don't think about when they buy a house. They all just see the shiny object and
They see the
let's
giant
go do
pool.
it. Yes.
They see the private guard, 24-hour guard gate. They see
all that costs money.
nothing in
maintenance.
life is free. Look
That's
at us,
right.
just an episode full of truisms.
I know, right? Hopefully not too depressing. Not too depressing either.
No.
But again, I get phone calls from people who are unprepared for that.
Yeah.
And they obviously didn't listen, because that's part of my preparation for you to buy a house, is to understand, okay, I recently had it with a person that is buying, moving up into a higher price range home, much higher price range. And I had to explain to them, with a higher price range come higher problems, potential problems, maintenance issues. And they hadn't thought about that, of how much more money they were going to spend on maintenance on this bigger house. Right. And it was, I mean, they were literally saying to themselves, are we really ready to do that?
Well, and along with that higher is, the larger the square footage, the higher your utilities as well. So that's
100%.
sometimes talking about expenses of owning a home outside of your mortgage, or in addition to your mortgage, are your utilities. The bigger the house, the more it's going to cost for gas, for electricity, water.
And insulating your house could be a great, not maintenance, but improvement to the house.
So that's just a bonus tip.
Yeah.
Look at insulation.
Doing some extra things. So here we are. Once again, you spend another, 20 minutes with us.
You spent a moment with us, and it just flew by, because we're just so pithy and fun and full of information, right?
Well, till next time.
That's our intention anyway.
We'd love to see you again. So like and subscribe and leave us a comment, and we'll see you next time.